know one of the things that I've noticed clients are overlooking in their financial plan is the importance of having the proper amount of insurance. Everybody wants to pay the lowest amount. Nobody actually wants to pay that insurance premium. But what they don't realize is by cutting that premium, perhaps they're actually cutting into, not just their earnings, like what they're taking home, but their retirement income can be cut, their retirement assets, their savings, everything can be affected in just the blink of an eye. And so I thought today, talk a little bit about, educate a little bit about, everybody thinks about insurance and they don't really understand how it actually works. So maybe take a few minutes and explain to people what it is and how it works.
All right, you bring up a good point, because when you look at insurance, really it's a transfer of risk. You're asking someone else to take the financial brunt of a loss versus you having to fund that yourself. So the connection with assets and income is basically when you purchase insurance, you're saying, I don't want my income or my assets to be affected by that unexpected loss. I want someone else to take that away from me. And so insurance really is a transfer of risk for a price. And the price is typically pennies on the dollar, right?
When we actually look at how much we're spending over the course of the year and you divide it by a daily cost,
right,
depending on the situation that we're trying to insure, businesses
right,
being a whole separate business than, no pun intended there, than individuals and the liabilities that they assume. So when it comes to, there's all sorts of different insurances out there, and I don't think people connect the dots between, oh yes, I have to have health insurance. Like that's the one priority that they always have to have. But how about when it comes to the different kind of insurances like home and auto, and many people aren't even familiar with umbrella and what
right,
that does to them.
Right.
Explain that just a little bit.
I think what people get focused on is what they're required to have, right? So when I buy an automobile and I borrow money from the bank is concerned about my car or the asset itself being covered. Same with a home. If I go buy a home, the bank is concerned that their mortgage is covered, right? And so the focus becomes on the actual physical asset, like the auto or the home.
Mm-hmm.
But the types of losses you might face with an automobile would total maybe $10,000 or tens of thousands of dollars. With the home, same kind of thing. However, if a homeowner is sued or an auto owner, driver is sued, the losses can be hundreds of thousands of dollars. And so the banks aren't as concerned about that because they don't play in that equation. They're not party to a lawsuit. But the individual, again we're talking about the connection to assets and income, their potential largest loss is the liability piece. So that's why it's very important to have very good liability limits on auto and your homeowner's insurance, because that is your largest potential loss. It's the one that could potentially bankrupt you or result in seizure of assets.
So for somebody like me who has this really beautiful property that has this really beautiful pond, it's great from a homeowner's perspective, but I've learned over the years that that's like a prime target of liability as well, because somebody's running around, they fall in the pond, they get injured in the pond, it was all in fun and games and nobody was intentionally trying to hurt anybody.
Right.
But if somebody gets injured and there's a loss of income or worse, a death situation, that's where that liability piece comes in of, you knew you had a risk and you didn't forewarn people, hey, at risk kind of type thing.
Right.
So when you have a situation like that, and I know from a car perspective exactly what you were saying. So unfortunately, deer are very attracted to my vehicle. And so, they like to run into the side of them, thank God, and not the front, have me run into them. But each time I've had repairs done, it's, $2,500 or $5,000 or something to have that repair done. So if I had to, probably, figure out a way to pay for that. But if I was distracted and I ended up injuring somebody in a car accident, then they could come back and actually say, and I know this is a big one with like texting and, that kind of thing. I was a distracted driver, so I'm gonna come after you and I'm gonna sue you for my lost income and my injuries. If I only have the minimum amount of insurance, how much am I protected?
All right, well, that's a good question. In New York State, on the auto insurance side, you only have to carry $25,000 worth of liability protection for that other person that's injured, where you might be partially or totally responsible. So you look at $25,000 in today's day and age, the average bodily injury lawsuit is much greater than that, and potentially they go much greater than that. So you have a scenario where if you're carrying minimum limits, for example, you could be left holding the bag for many tens of thousands of dollars, and you're also putting yourself in a position where the insurance company is not going to be as interested in providing decent counsel and representation, right? So we tell people this sounds a little cynical, but it's true. The more the insurance company is on the hook, the better representation you're going to get. And we've seen instances where people who have had low liability limits, they get into a bad accident, or a bad accident happens in an attractive nuisance at their house, like your swimming pool, and the insurance company writes a check and says, we're done. It's going to cost us too much to defend this.
We're just going to pay it.
Yeah, we're just going to pay what our limit is. Because that's a game that people don't understand either, is that if I carry $25,000 coverage on my car insurance, and an insurance company is going to defend me, they're going to pay in addition to the $25,000. So they have to make a calculated, insurance companies do make a calculated assessment of how much is this going to cost to defend. And then if it's going to be significant, they have to weigh that against what are we potentially going to lose or pay. So it does sound cynical, but the better liability limit you have, the better representation you're going to get.